This is TFX trading floor. Welcome to a new week. It's first week, and we have a new month. This is August 1st. And actually, having had a nice week, the week that had just passed, we need to have an overall and see. And then we have a simple topic on risk factor and how you can go about our signals more so that you can maximize on the same. Is something a weakness I've found in most traders. But again, you have to be overall smart so that you can be able to gain more with our signals. But having said that, the key thing we need first of all to check is the overall. What we expect based on the economic calendar of this week. One of the key things you need to notice is we are on the first week of a new month. So on the first Friday of every month, we have what we call the non-farm payrolls or the job numbers from the US, which are quite volatile, especially on Friday. Then you have the employment change on Friday. So this makes quite Friday to be quite a week or a day whereby it can be being the last week of the month and the last day of the week, which are, of course, the market tend to be quite a bit fragile and a bit risky when you are trading. So kind of note on this. So we'll have trading based on such that on Friday we'll just be exiting our profits. Apart from that, then on Thursday, you have the GBP monetary policy statement or the rate statement. Remember the rate statement releases the one of the most volatile economic calendars of the week. You need to notice this on Friday, and especially on this week, we'll have some trades that will be picking based on the pound, so that on Thursday we'll be exiting or leaving with good profits. We'll be able to break even or adjust our risks accordingly. Apart from that, Tuesday is tomorrow. We have at least the RBA or the rate statement. We have again, or we have the rate releases for the Australian dollar, and this one becomes again quite tricky, phenomenal, or quite interesting because again you have some trade based on the AUD. So maybe this one will drop after the news releases from tomorrow, but again it's on the early morning. So maybe by the time you're hitting the London session, we'll be able to give those trades. So those are the three key things. The AUD, then on Thursday we have the pound, and then on Friday we have the non-farm payrolls or the job numbers from the US. Those are the key things you need to note. Every time you open a trade, every time you open a new week, the first key thing you notice, you come to the economic calendar, because the economic calendar or the price that we find here, the technical analysis will say that technical analysis do follow, or this price will follow the fundamentals. Why, like in the New Zealand dollar or the dollar versus the yen has been rising for like the last 3 years, is because this means only that the fundamental key things or the fundamental supporters of the New Zealand dollar has been strong and the yen has been weak. Like in last week, though, we are eating on retracement back to the dynamic support, to the MAs or to the moving averages. So that is still part of our topic when you're dealing with technical analysis. Apart from that, another short key thing, or the key thing that we need to go through, is based on our mostly on our signals that we do give. Like on last week, we have the AUD JPY sell. We had this one. This sell was based from this point. Sell was from this point, and we crossed around this point. The other point we have, the other trade we have was, it's just for learning purposes so that you understand how you go about our signals. We have the CHF JPY sell. It was at this point, and I think we closed around this point on Friday. And the last one we had is the DDJPY. We didn't have many trades because the week, but we see on Forex rest is small. I think we closed around this point. So all it was 100% a profit. But the key thing you need to notice, can you check the retracement back? This is the key thing, because the most traders are losing on this point. We say the price does not move on a straight line. If you check from this point, the price has dropped for over 152 pips, but it had a retracement. The price first of all went back from almost Wednesday back to 59 pips. Then this one, then let's check on the other one, especially for CHF JPY. This one, the price moved back for 3 days for around 126 pips, you see, but again, it went into a direction to 177, around 200 pips. And lastly, this is the CHF JPY. In fact, it almost hit our SL because our stop loss was behind this previous day candle, the previous week candle. If the entry was at this point, the price went back for how many? Almost 150 pips. So does that tell you? That tell you then your risk factor must be quite strong. That's why you always say, if it's $10, if you have like a 50 USD account, because we've come to find that most of the traders don't have those huge accounts between 0, 50, 100, 1,000, several thousands, and then maybe several hundreds of thousands that we do have. So that's why we say that for every trade, make sure to know the volume that you are using. Make sure you take your balance and you divide with the 10,000 standard lot. This one will give you the actual volume. If it's 1,000, do not move more than 0.05. This means do not move to more than 0.1 volume in each and every trade. Then make sure it's a maximum of 3 to 4 trades, and you are okay. If you have 50 USD, make sure you in each trade only 0.01. Why? If you check on this trade, the point the price is moving back, just make sure it does not pass the $10 mark. If 0.01 volume of 100 or 1,000 USD passes 0.1 passes of 100 minus 100 USD, then that is not your trade anymore. And that's why if you check in most of our trades, they are between 50. Most of the time, most of them is between 50 to 100 pips stop loss. But to the maximum, and the crazy one was this one, it went to almost 150. This was a crazy one that moved to this point. So this is the risk. If you are going to take this profit, are you ready for this risk? If you're not ready for this risk, then don't take this trade. The same case. This does not mean that it happens in all our trades. Because if you check out like this one, if you're not ready to take this risk from this point to this point, then you're not ready to take this profit. In the same case, we are in ZDDJPY. If you're not ready to go to this loss, then the price will not be ready to take this profit. So this is plain truth in everything you do in the Forex market. So to be smart, that means you need to know how to maneuver through this risk in order to take this money. And in each and every market, it's only that you cannot be able to expose on our trade that we'll be taking this week, because most of them will be in our premium signals group. What actually means is, for every trade that you are taking, even buying at this point, the price will, after sometimes first of all, go in the wrong direction. Like as a DDJPY, if you check on the lower time frames, especially from the DDJPY, most of the traders, if you check on this point, if we took this trade around this price point, this price moving back in this point, but look at the overall profit from this point. It's so big. And another one case we did check was in AUDJPY. Most of the traders were cheated that the price was going to buy, and the price was moving up actually. But what actually happens? The price does change the direction and moved in the overall move, whereby the market had to come and retest this point here. And this is why you had exited the market. If it's a case whereby the price is moving in the direction of the market, a point like this trade here, I remember very well we did buy at this point. Look at this price from this point. It come back. But after that, the price moved in our direction. So when you are in losses, does not mean that you are in losses. It only means now you are just preferentially in maybe a 2 or 3 days in the worst case scenarios like last week. Other cases, the price will just shoot in the price in the direction of our trade and go directly into our profits. But be prepared for the worst scenario. So that means you need what we call patience, because if the trade is based, like this example was based on a weekly candle, then that means you have to wait for this candle to close. And if you had waited for it to close, that means you closed at a profit. And you have to have strong balls, because you can check again in our trades. These were the trades that we did close. These are some of them. Like this was CHFJPY, this one's the DDJPY. If you have to wait for that, you'll be able to make something, because even if you have a small deposit like this, just 70 USD, you'll have made good money. You see, over double. In fact, it's going all the way to the triple, and you can check this with the draws. So this is just for the ones that we used to check on those trades that we give false signals. What about if you have a bigger account? So these are the cases scenarios that we always keep on talking about. But make sure when you start giving our signals today, do your calculations very well. Do not over risk your account. Grow gradually. In 3 to 6 months, you'll be in very good profits. You'll be in good profits. So that is it. Again, that is it. I wanted to expound on that point, so that when you'll be taking our profits, you know what we already, unless your stop loss is hit, hold on to that trade, because it will make money eventually by the end of the week. And this we've been able to do this over and over. So that is it for this week. Let's meet in our trading floor, in our Telegram, in our premium signals. Again, grab the offers. They're only for today, tomorrow, and on Wednesday. And then from that, we'll be able to continue and resume our normal offer. So that is it. And thank you for being with us. This TFX trading floor, just trade smart to make money. Forex is real. We always make money.